A lot of that paper is sitting on the balance sheets of local and regional banks. And so they're going to have to take big losses that they report. Instead of just having it be unrealized, it's going to have to be realized and reported. That's going to scare their depositors who pull their money out, and that's going to bust a lot of these banks. We'll have runs on a lot of local and regional banks, which spread to the...
You're watching Silver News Daily. Subscribe for more.
John Rubino is making waves with a prediction that's hard to ignore. Silver could hit an all-time high, and some experts say it might even reach $100. Sound impossible? Well, here's the kicker. There are market forces at play right now that could make this bold claim a reality. Stay tuned, because by the end of this video, you'll understand why silver might just be the most important investment decision of the decade.
Was that, and then we were drifting into authoritarianism, where censorship seemed to be the policy of the establishment. They wanted to stamp out any kind of dissenting speech. So we were drifting into that kind of a dictatorship. Now, post-election, that's all mostly gone. We're probably going to manage our geopolitics better. And there's a decent chance that we step back from the World War III precipice where we were. The border is probably going to get shut down and controlled. And censorship is less likely now in most areas of public discourse. So we're not going to become a dictatorship in the short run. So all of that is taken care of. And I think the financial markets, we're looking at all of those things going into the election. And that's part of why gold went up the way it did. And part of why there was an expectation of the Fed easing aggressively, because they didn't want to be tight going into World War III and all the rest of this stuff. So you take away the non-financial aspects of people's anxiety, and you get the world that you and I used to talk about, Donegan. Remember when a big financial crisis was really the thing, and we didn't have all this other stuff to worry about? And there's a chance that we're heading back into that kind of world, only with the financial crisis much, much worse, because we've, in the intervening 5 years, taken on immense amounts of new debt. So, there are no guarantees about anything, but it looks like a lot of the other stuff we were worried about is going to be backburnered new. And we can start talking about finance again, which is, to me, it's a nice break from what was super stressful before, because, a country drifting into dictatorship is just not fun. There are no winners in that. World War III, obviously, there are no winners. And open borders, there are absolutely no winners, except potentially for the party that lets in all those tens of millions of new people and gets them to vote for them. And then we were also headed for a one-party state if we kept our borders open. So anyhow, take all of that away, and then we've got finance to think about. And finance is basically where it was before, only worse. We're taking on immense amounts of new debt. There's absolutely no way to control government spending, even though the new administration is going to attempt it. But interest costs on the government debt is now bigger than the military budget. Baby boomers are retiring, so it's going to cost trillions and trillions of extra dollars to take care of us, give us all our hip replacements and, heart surgeries and things like that we have been promised by previous administrations. So we've got that financial crisis coming still. And the question of timing is that will the financial markets be very optimistic because we got rid of all that other stuff, and will we still have a bull market in equities for a while, and will bonds be well behaved, and will precious metals not be perceived as that necessary because you don't need hedges against chaos if you're not heading into chaos. So it'll be eventually perceived that we are heading into chaos, and then we'll go back to a inflation hedge friendly market, but it's not clear how long that's going to take. Although, as we're speaking right now, stocks are tanking because interest rates went up on all of this. So it could be that we're heading back into that chaotic.
Silver has always been a fascinating player in the precious metals market. Think back to 1980 when silver reached its legendary peak of nearly $1.50 per ounce, driven by a market frenzy fueled by the Hunt brothers. Fast forward to 2011, During the aftermath of the global financial crisis, silver once again flirted with that $50 mark as investors sought a hedge against economic uncertainty. Now here we are in 2024, with silver prices hovering below $31, and many are asking, could history repeat itself, or even take us beyond those historic highs? The past teaches us one crucial lesson. Silver has the potential for explosive growth, especially when key economic and geopolitical conditions align. And here's a question for you. Do you believe today's market dynamics are setting the stage for another silver surge? Let us know in the comments and keep watching to find out more about the forces driving this precious metal higher.
Now, because lots of good things are being proposed by the incoming government. The stuff that Kennedy is going to do in the health sector is mostly very exciting, and the idea of Elon Musk and Vivek Ramaswamy heading up a quasi-government group that's going to look at ways to make the government more efficient, that's also excellent. I mean, there's an awful lot of things you could do that would allow you, in a government like ours, to get rid of, say, a third of the people who work for the government at any given time. And that's awesome, because you can replace people with technology in bureaucracies in ways that the bureaucracies themselves don't recognize until somebody on the outside comes in and does it for them. So, I think that's all possible, and it's going to be fun to watch. Oh, and we could also make peace with a lot of countries that we've antagonized in the past. All of this would be excellent. But it doesn't change the fact that boomers are retiring, so we have trillions of extra dollars that have to go to my generation. We have $35 trillion and rising of debt already borrowed by the federal government. So the interest cost on that debt is spiraling out of control now. It's parabolic and continuing to go straight up. And stuff like that can't be fixed if you don't just take a meat axe to government spending. And, we're not going to do that. We're not going to cut Medicare. That's politically impossible. Social Security, politically impossible. The defense budget, I wouldn't call that politically impossible, but the guys in charge that even Trump is putting in charge right now are never going to stand for a 1/3 cut in the military budget, which we should do, but we won't. So the big items in the government budget, which are interest, Medicare, Social Security, and the military, are untouchable. I mean, they could be made more efficient, but generally speaking, spending on them has to go up. So there's no fix, and the market kind of has to impose something on us at some point. And that's already starting to happen. The Fed started a new easing cycle here. They cut interest rates by 50 basis points, then another 25 basis points. And you would expect if the Fed can control interest rates, that long-term interest rates would start going down once the Fed starts cutting short-term interest rates. That didn't happen this time. Bond yields, especially the 10-year Treasury, which everything keys off of, bottomed just before the Fed started cutting and has been going up ever since. So in effect, monetary policy is tightening no matter what the Fed is talking about now. And until they go back to QE and they start buying long-term bonds with newly created currency. But can they really do that? Because we found out what happens when you flood the system with new currency in 2021, 22, we ended up with double-digit inflation in 2022, and people know that.
Silver's value doesn't just hinge on its status as a precious metal. It's deeply intertwined with global economic conditions. Let's start with one of the biggest drivers, inflation. In times of rising prices and declining currency value, investors have historically flocked to precious metals like silver as a safe haven. The fear of inflation, spurred by aggressive monetary policies and government spending, has already begun to take hold, creating the perfect storm for a silver rally. Then there's the Federal Reserve. While interest rates have remained high, many analysts predict a shift in monetary policy toward easing as inflation stabilizes. Lower rates reduce the opportunity cost of holding non-yielding assets like silver, making it a far more attractive option for both retail and institutional investors. On top of this, the strength of the U.S. dollar plays a pivotal role. Recently, we've seen the dollar face downward pressure from profit-taking and global economic uncertainty. When the dollar weakens, silver priced in dollars becomes more affordable to foreign buyers, fueling demand and driving up prices. And finally, fiscal deficits and debt levels across the globe are pushing concerns of currency devaluation to the forefront. Could silver emerge as the hedge of choice in a world increasingly skeptical of fiat currencies? It's no longer just a possibility. Many see it as an inevitability. The question is, with inflation fears mounting, central banks reconsidering monetary policy, and a fragile dollar, will silver become the go-to asset for protecting wealth? Let us know your thoughts below. And don't forget to hit that subscribe button so you don't miss the rest of this deep dive into silver's extraordinary potential.
That's possible now. It's in short-term living memory for most of the country. So if the government tries that again, in other words, tries aggressively to push down interest rates by creating a lot of new dollars and dumping them into the banking system, we're liable to see everybody front run that this time. In other words, they see the conditions are being created for another bout of inflation, so everybody panic buys everything, which sounds suspiciously like the Austrian economics crack-up boom. So we'll see. We don't know for sure that that's the way it's going to play out, but there doesn't seem to be another scenario in which the Fed aggressively tries to get a grip on interest rates. And if they don't do that, then interest rates are going to stay high enough to bankrupt all kinds of entities out there, commercial real estate, housing. We could spend a whole show just on what's happening with housing right now, because it's already pretty much frozen in the U.S. because house prices are unaffordable for the average person. So hardly anybody can buy a house now. And you need either falling house prices or falling mortgage rates. Well, if we don't get falling mortgage rates because bond yields are going up and that's pulling mortgage rates upward, then nobody's going to buy houses. And we're seeing a lot of new inventory come onto the market right now. So if that inventory has to sell, which a lot of it will have to sell, it means house prices have to tank. So there's one recessionary indicator right there, Housing is frozen, house prices are going to tank. And you can look around at other parts of the economy and find similar stories where an awful lot of things are pointing towards a recession unless interest rates plunge from here. And the only way to make them plunge is to risk another bout of serious inflation and all the knock-on effects that implies. So we're kind of in that box, Dunnigan, where the Fed has no way out, and they can only choose one crisis or another. There's no organically growing, healthy economy that can flow from where we are now. There has to be some kind of a crisis that incents us to fix the system. So, I think this administration is uniquely qualified to do that because they're already making really aggressive steps to fix a lot of other things. So it could be that we may end up turning them loose on the monetary system at some point and seeing what they come up with. But there's got to be a crisis first. So the whole dollar collapse scenario took way longer than it should have to play out, but it is playing out according to the script. It's just that each act in the play took way longer than it should have. And so we can expect the current one to take.
Silver isn't just a hedge against economic uncertainty. It's also a cornerstone of modern industry. Unlike gold, which is largely hoarded as a store of value, silver plays a dual role as both a precious and an industrial metal. This duality is a key factor in its price dynamics and sets the stage for a massive surge in demand. One of silver's most exciting applications is in renewable energy. Did you know that solar panels rely heavily on silver for their photovoltaic cells? In fact, the global push for clean energy has driven a record-breaking demand for silver, with industrial usage hitting an all-time high in 2023. Governments around the world are investing heavily in solar infrastructure, and silver is at the heart of this green revolution. But it doesn't stop there. Silver is critical in the production of electric vehicles, EVs. EVs use almost double the amount of silver compared to traditional combustion engines. And with EV adoption accelerating globally, the demand for this metal is only expected to rise. Added as silver's indispensable role in emerging technologies like 5G infrastructure and advanced medical devices, and you've got a metal that's essential to the future of innovation. Here's something to think about. As industrial demand for silver continues to grow, could it create a supply squeeze that pushes prices even higher? Let us know your take in the comments, and make sure to subscribe for more insights on how silver could reshape markets in ways we've never seen before.
Absolutely, we'll try to stop all of this, and up to and including assassinations. Okay, so this is not going to be a linear process. It's going to be pretty chaotic because of the resistance. Well, first of all, because of the policies that are being enacted, and then because of the resistance to them. So, this is going to be fascinating to watch and totally unpredictable in the details. Now, having said that, this Trump administration is like night and day different from the previous one. He didn't think he was going to get elected first time around, so he didn't have any kind of a transition team in place. There's, okay, I can't remember the name of the guy who wrote this, but there's a story about one of the government agencies in Trump's first term who was, they were all ready. They had all their people, all their briefing books and everything. And they were ready for the Trump transition team to come in and take over their branch of the federal government. Nobody showed up. And then eventually one guy came in, and all he wanted to talk about was how they could cut spending in that agency. So that was the Trump administration 1.0. So he ended up hiring a bunch of people. As you said, he didn't know what to do. So he just ended up hiring a bunch of swamp monsters, people from the existing deep state. And they made his life miserable from day one. This time is completely different. They privately financed a transition team that started earlier than normal for an incoming administration. And as we're seeing now, they're lining up new appointees for all the major institutions in the federal government. And those guys are bomb throwers. The national security people, unfortunately, are mostly neocons. It looks like they are going to be tough to overcome if Trump wants to make peace quickly around the world. But it could be. He used to talk about John Bolton, his national security advisor, as a prop to scare other countries into being willing to make deals. So it's conceivable that his national security people are those kind of people in Trump's mind. He's going to use them to make Iran be more willing to deal, and Russia and China and everything. And we'll see about that. But the rest of the people he's putting into place, Kennedy, Kennedy just announced he was going to fire the top 400 scientists at the FDA. So these guys are going to they're going to hit the ground running and come in swinging at their agencies. And I think we'll see a lot of change.
Geopolitical turmoil has always been a major catalyst for safe haven assets like silver, and today's world is no exception. Take the ongoing Russia-Ukraine conflict, which recently escalated with Ukraine's deployment of advanced missile systems deep into Russian territory. Events like these don't just dominate headlines. They send shockwaves through financial markets, driving investors to seek stability in tangible assets. The ripple effects of these tensions are felt globally. Investors grow cautious, seeking refuge in assets like silver, known for its ability to retain value when uncertainty reigns. And it's not just about war. Trade disputes, economic sanctions, and global political instability are adding fuel to this fire. For instance, rising tensions between the U.S. and China over trade policies and technology are creating further economic uncertainty, reinforcing silver's appeal as a hedge. Then there's the nuclear threat. Statements from Russia's foreign minister about doing everything possible to avoid escalation have eased fears, but the mere possibility of a conflict of that magnitude keeps safe haven demand alive and well. Here's the big question. Could these geopolitical risks be the tipping point that propels silver prices to new heights? Let us know your thoughts in the comments, and remember to subscribe for more updates as we uncover how these global events are reshaping the silver market.
Assuming Trump can get them all passed through the Senate, the Senate will agree to putting them in office. And So Matt Gaetz, as the secretary of, or as the head lawyer, he's going to be a tough sell. And Tulsi Gabbard at the National Intelligence Agency is going to be a very tough sell. And so is RFK. So we don't know that these guys actually get through the Senate, but Trump was elected with a mandate. And the vast majority of Republican senators want to give him what he wants. But he's testing their resolve with a lot of these guys. And, I love Tulsi Gabbard. She would have been a great Secretary of State, too. And Kennedy is exactly the right guy for the FDA. Vivek Ramaswamy and Elon Musk are exactly the right people for where they are. So, this is a dream team from a libertarian standpoint, with the exception of national security. So a lot could happen, but, we can't delude ourselves into thinking that the senators, the main Republican senators, are going to like the idea of shutting down the corruption in the national health system, because public health is hopelessly corrupt, but it's also incredibly lucrative for today's senators. They make tons of money from Pfizer and the other big pharma companies. So Kennedy comes in and says he wants to take away a lot of the current power and of the freedoms of these big pharmaceutical companies. A lot of senators are going to see it in their financial interests to block him. So anyhow, we'll have a lot to talk about next time we talk, because within a month, a lot of this stuff is going to be resolved. We'll find out who makes it through the Senate, who doesn't, and then what those guys do once they're in office. And I'm optimistic about a lot of this stuff from the standpoint of giving us a better government after a couple of years. But the financial thing is unfixable. You cut $1 trillion out of the federal government, which is politically virtually impossible, and still be a hopelessly profligate government that is racking up debts in an unsustainable way. So I think the financial side of this has to happen via the marketplace. In other words, we have to have a gigantic financial crisis, and then we have to rebuild something that works from the rubble. That has to happen. But at the same time, it's going to be fascinating to watch all these other aspects of the government.
Markets aren't just driven by data. They're heavily influenced by sentiment and psychology, and silver is no exception. One critical level to watch is the $1.30 psychological barrier. Historically, breaking through significant price thresholds has triggered waves of investor enthusiasm, and silver is no stranger to this phenomenon. Why is $1.30 so important? It's not just a number, it's a signal. When silver approaches these levels, it tends to capture the attention of institutional investors and retail traders alike. Suddenly, silver is no longer just a slow-moving commodity. It becomes a story of momentum and potential. Analysts have pointed out that surpassing $1.30 could trigger a cascade of buying, pushing prices even higher. This sentiment-driven movement is amplified by the gold-to-silver ratio, with the ratio historically averaging around 60:1. Current levels suggest silver is undervalued compared to gold. As the ratio normalizes, it often results in a surge in silver prices, driven in part by market psychology. But here's the twist. Investor fear of missing out, or FOMO, plays a massive role. As silver starts to climb, those who hesitated may jump in, further fueling the rally. The question is if silver can breach this critical $1.30 mark. Could it be the spark that ignites a bull run? Let us know what you think in the comments. And don't forget to subscribe for updates as we track silver's thrilling journey.
Stories about why the experts say we can't do this or we can't do that, and it's that's something the guys in the Trump administration who are trying to do those things are going to be immune to that stuff. But will the senators and congressmen, when they're hearing stuff, I saw this on CNN and I don't want it to happen because they said it was going to be terrible, the congressmen and the senators who are going to have to fund it and allow it to happen are going to be under a lot of pressure. So we'll see. This isn't going to be smooth. I mean, revolutions are very seldom smooth. And what the Trump administration and the people he's putting into place are talking about is is a legit revolution. I think an example, actually two examples that we can learn from are Argentina, where Javier Milei just went in, he laid off 70% of the government, just fired him, and now Argentina is running a surplus, which for them is just, that's a banana republic or a former banana republic. And they've got better finances in terms of annual budgets, inflow and outflow, than any major country other than Russia right now. And then the other one is El Salvador, where that guy just went in and he rounded up all the gang members out there. The country was plagued by gangs. So he just rounded them up, put them in gigantic prisons, which, okay, there's an authoritarian side to that probably we don't want to emulate, but that kind of resolve, getting results that quickly is fun to watch. So that kind of attitude is something that Trump's people will have to have, and then Trump will have to back them up because it's not going to be pretty. And Trump will have to deal with a lot of the blowback, in his press conferences, he'll have reporters standing up and saying, so-and-so from the FDA just lost their house because they got laid off and, that kind of thing. And their two kids they have to be pulled out of school and, they're going to have to move back to Kansas to be with their grandparents, stuff like that. And Trump is going to have to deal with it. It sounds like he thinks he's ready. We'll see, but, it could be that sometimes having somebody who's old in a place is better than a young person because the old guy just doesn't care anymore. Trump might be thinking, I got 5 more years. Let me go out with a bang here. Let's leave the government completely transformed by the time I walk away. And then who cares what happens after that? I don't care if CNN doesn't like me. And so that's what we can hope for. We'll see. But it's going to be fascinating, and the Tulsi Gabbard thing is especially hilarious because the Biden administration put her, first of all, they don't like her because she used to be a Bernie Sanders Democrat who switched sides because she was so appalled by what the Democrats were doing. So they labeled her a Russian spy, which is ludicrous, but they trot that out all the time. And then they put her on a terrorist watch list so that whenever she flew, she was trailed in the airport by federal marshals, and then they had to put a federal marshal on the plane with her, and then other federal marshals had to trail her out of the next airport. And so now Trump made her the head of the intelligence all the agencies for the U.S. The Central Clearinghouse for CIA and
Silver's future isn't just about demand. It's also about supply. And right now, the supply side of the equation is showing cracks that could drive prices higher than we've seen in years. Let's start with mining. Silver production has been struggling to keep pace with growing demand. Many of the world's major silver mines are aging, and exploration efforts haven't yielded enough new discoveries to offset declining output. Adding to the pressure, mining costs are rising due to inflation, energy prices, and stricter environmental regulations. But it's not just about production. Recycling, which has traditionally played a role in meeting silver demand, is also facing challenges, as industries like electronics and renewable energy require more silver. Less of it is making its way back into the market through recycling streams. Here's another key factor: geopolitical risks in mining-heavy regions. Countries rich in silver reserves, like Mexico and Peru, have faced political instability and regulatory changes, disrupting mining operations and tightening global supply. All of this points to a critical question. As silver's industrial and investment demand surges, will a looming supply crunch drive prices through the roof? Share your thoughts below and hit that subscribe button so you don't miss our next deep dive into silver's explosive potential.
60s, they start downsizing and stuff. The kids are out of the house. They don't need all this house anymore. They start downsizing. Boomers haven't done that, in part because boomers are healthier than most previous generations, and in part because a lot of them have been locked into 3% mortgages. Because if you got 3% money, it's hard to say no to that. It's hard. I mean, it's hard to do away with that, especially if you might have to take out a mortgage on your next house because it would be way more expensive. So Boomer should have done it already. Airbnb guys, yeah, you would kind of think that as soon as mortgage rates went up, that they would be selling because the calculus through which they determine their cash flow has been changing. So I don't know. I kind of think interest rates are the key here, and that if interest rates stay here or go up from here, that's a catalyst for almost everybody because at a certain point you stop thinking, wow, 3% mortgages are the norm, because that's so far in the past. Now you have recency bias with interest rates, as with everything else. And if a mortgage is 7.5%, and it has been more or less for the last 2 years, then that's normal. And so you think that your costs, you're never going to be able to refinance if you're a hedge fund or a Airbnb guy. So maybe you think, well, screw it, let me out. And there's no way to know how this happens sequentially, who starts. But once somebody starts, any of those three groups are big enough to move the housing market, start prices heading down. And I have a friend who's a real estate manager in Arizona, and he just emailed me the other day saying that, they're getting a lot of properties for them to manage, people who want to put their houses up for rent. And a lot of it is people who are being transferred to another place, or they just can't make the payments anymore and they need out. And so they're coming in with very reasonable rent expectations because, they just need to get out. And I think that's going to be something that you see out there because rents will fall along with prices as this gets going. And those distressed homeowners that my friend is talking about are kind of a sign of things to come, I think.
Now, let's dive into the bold prediction that has everyone talking. $100 silver. At first glance, it might seem far-fetched, but when you break it down, the case for such a dramatic price increase becomes clearer. One key argument lies in the gold-to-silver ratio. Historically, this ratio has averaged around 60:1, meaning 60 ounces of silver are needed to match the price of 1 ounce of gold. Right now, the ratio sits at much higher levels, signaling that silver is undervalued compared to gold. If the ratio returns to historical norms or dips even lower during a silver bull run, prices could skyrocket. Then there's inflation and currency devaluation. As central banks continue printing money to manage economic crises, many fear the erosion of fiat currency's value. Silver, often referred to as poor man's gold, has been a favorite hedge against inflation for centuries. As trust in paper money wanes, demand for silver as a store of value is poised to climb. Add to this the industrial squeeze. Silver isn't just a financial asset. It's a critical component in green technologies, electronics, and medical applications. With no viable substitute for many of these uses, any supply shortage could amplify prices exponentially. And let's not forget market psychology. If silver crosses significant thresholds like $1.50 or $1.60, it could unleash a wave of investor enthusiasm, creating a self-reinforcing cycle of demand. The big question remains, will silver hit that elusive $100 mark? The stars may be aligning, and only time will tell. Let us know your thoughts in the comments, and be sure to subscribe so you don't miss the final steps in breaking down this incredible market opportunity.
We'll know the story that I'm going to tell, so I'll keep it nice and brief. But a lot of office buildings went up in the previous decade, financed with super cheap money. Now interest rates are up, so those buildings might have to be refinanced at higher interest rates. And at the same time, during the pandemic, a lot of people figured out that they don't like to work in offices. They want to work at home. So offices aren't as full as they used to be. So their cash flow is down and their interest costs are going up. A lot of these buildings just can't make it. So they're going to be they're either going to declare bankruptcy or they're going to be sold at much, much lower prices, both of which produce losses on the paper that was taken out in order to build these buildings. So a lot of that paper is sitting on the balance sheets of local and regional banks. And so they're going to have to take big losses that they report. Instead of just having it be unrealized, it's going to have to be realized and reported. That's going to scare their depositors who pull their money out, and that's going to bust a lot of these banks. We'll have runs on a lot of local and regional banks, which spread to the other local and regional banks. And, we're talking several $1 trillion here. So the federal government will have to step in and bail them out. And then what does that do to the dollar if everybody's watching a gigantic bailout, and wonders what the implications are? Okay, that's commercial real estate. Housing, as I said before, the price of today's prices is unmanageable for most people. Houses are unaffordable. Now, at the same time, we've got three sources of massive new inventory coming onto the housing market. First is my generation, the boomers. We've been in McMansions for the past 20 or 30 years. The price of those McMansions is way up, but it's hard for us to manage now because, our hips are sore. We can't get up and down 3-story houses very easily. We sure can't do the yard work on an immaculately landscaped acre. So, we're going to be dumping those McMansions and the other houses that aren't McMansions but are still bigger than we can handle soon. The average baby boomer is in their late 60s right now. So we're heading into a stage where, you got issues, and a house is not the kind of thing that you want to hold on to if you can't get up and down the stairs. So boomers are going to start selling houses. And then you've got the Airbnb guys who built little real estate empires over the past decade of, a couple of apartment buildings here, maybe a house or two there, all financed on the assumption that cash flow would be sufficient to cover the interest costs. Well, that's not happening for a lot of them. So they're going to have to dump a lot of their properties or go bankrupt and then have the bankruptcy court handle that. The banks take them back and everything. So that's another big source of inventory. And then Wall Street, they turned out to be the biggest landlords in the country in the last decade, when private equity guys just went around and bought up entire neighborhoods for 20% over the asking price. And now asking prices like that are nowhere to be found, or nobody can pay them. So prices are going down, which is screwing with the projections of these hedge funds and private equity guys, because now they're not making nearly as much money as they thought they would. And we know from, our lived history that when Wall Street finds out that a bubble's not working, they panic sell. They just bail on that thing, everything falls apart. And that's housing now for the first time ever. We never had Wall Street treat houses like a speculative asset and jump in.
While the case for $100 silver is compelling, it's crucial to consider the other side of the equation. What factors could hold silver back from reaching such lofty heights? One major headwind is rising interest rates. When rates are high, the appeal of non-yielding assets like silver tends to diminish. Investors may prefer bonds or other interest-bearing instruments, which could reduce demand for silver as an investment. Then there's the potential for a global economic slowdown. Silver's dual role as both an industrial and precious metal means its price, tied not just to safe haven demand, but also to industrial use. A significant economic downturn could curb demand in key sectors like electronics and automotive, offsetting bullish momentum. Supply-side surprises are another risk. While mining challenges are real, any unexpected surge in production or recycling efficiency could ease supply constraints and temper price growth. Let's also talk about competition. While silver shines as an investment, it's not the only game in town. Cryptocurrencies, equities, and even gold are vying for investor attention. Diversification trends could dilute the capital flowing into silver. Finally, market manipulation concerns have dogged the silver market for years. Large players can influence short-term price movements, potentially derailing a natural upward trend. So what do you think? Are these risks enough to prevent silver from hitting $100? Or are they just speed bumps on the way to a historic rally? Let us know in the comments. And if you haven't already, subscribe so you don't miss the next big updates on silver's market journey.
To an equities bear market, because the way it has worked the last couple of times is stocks tank, and then that pulls down gold and silver. And then it's kind of a V bottom. The Fed steps in, starts liquefying everything in sight, and then gold and silver just rocket. So that kind of a scenario is possible, if not likely, over the next couple of years. And we have to have that equities bear market first. So that's a thing to worry about with precious metals, but not seriously. Just dollar cost average. Don't try and time these markets because, smarter people and smarter computers than us are trying to do the same thing, and it's hard to compete with them. But what's happened just recently, I think a part of that is because built into the gold price, which was extremely high, was a lot of anxiety about World War III and dictatorship and open borders, that stuff. So you had the monetary worries that are normal that elevate gold and silver, but you had all this other stuff that people were worried about too. So this election took some of that away. So it's normal to expect that part of the risk premium in gold and silver to evaporate if those risks have evaporated. They haven't evaporated yet, but they've been lessened to the point where it impacts safe haven assets. So that's to be expected. And none of this stuff affects the long-term prognosis for gold and silver. I mean, we've taken on more debt than we can ever manage without some kind of a gigantic crisis. We have to deal with that. And that's going to be a very good time for precious metals because the Fed will conclude that the only way to deal with the debt is to inflate away the currency, and that's a great environment for precious metals. So we'll see that. That's coming. But, and there's one other aspect to this that I might be giving Trump and his people too much credit, but it seems like it's conceivable that they might actually just do something like go back to a gold standard, before we hit rock bottom, because he's got people around him who are, and the Fed, buy gold. And it's possible that they just come out with that sometime, some Sunday night, and that would be great. I mean, that would still be great for gold bugs because you would have to do it at a gold price of $10,000 or more per ounce. In other words, you'd have to devalue the dollar that much to make going back to a gold standard technically possible. So it could be that people with a lot of gold just wake up one morning and find their gold stack revalued by 2 or 3 times. And then we would avoid the horrendous part of the financial crisis that would, under normal leadership, have to happen before they accept a gold standard as the least bad option. So, let's say that's a 10% possibility that the Trump guys just impose a gold standard at some point before there's a gigantic crisis. And, I'm giving them a big compliment by even calling it a 10% possibility, because that's not something people in current power think of as conceivable, let alone desirable, and if those guys thought that would be awesome.
Now it's time to bring everything together. Could $100 silver really happen? The answer lies in the alignment of several powerful forces. First, the macroeconomic environment is primed for a silver surge, with inflation fears mounting and central banks potentially easing monetary policy. The conditions are ripe for a rush into precious metals. Silver's affordability compared to gold makes it an accessible choice for investors seeking to hedge against economic uncertainty. Next, industrial demand is set to soar. The renewable energy boom, driven by solar panel production, and the global shift toward electric vehicles create a near insatiable appetite for silver. Add to this silver's irreplaceable role in emerging technologies, and you have a demand story that's hard to ignore. On the supply side, challenges in mining and recycling only strengthen the case for a price breakout. With production struggling to keep up with demand, a supply squeeze could push silver prices well beyond current levels. But here's the wild card: market psychology. If silver can break key resistance levels like $50 or $60, it's not just about fundamentals anymore. It becomes a story of momentum, investor enthusiasm, and FOMO. This could amplify demand in ways we've seen before during historic rallies. Ultimately, $100 silver isn't a certainty. It's a possibility, shaped by a convergence of economic, industrial, and psychological factors. If you believe in silver's potential, now might be the time to pay closer attention. And remember, this is not financial advice. Always do your own research before making investment decisions. If you found this breakdown valuable, make sure to hit the subscribe button and let us know in the comments. Do you think silver will reach $100? Thanks for watching, and stay tuned for more insights on the most exciting opportunities in the market.
Stocks are just going to go to the horizon because they're so big and they're taking over the world. That's a prerequisite for a bubble because you need people acting like something is never going to change and being that reckless with their money before you get serious bubble prices. Well, I think you could make the case that housing is in a quasi-bubble right now. People aren't, they're not doing what they did back in the in 26, 27, 28, where they were taking insane risks and doing it with massive amounts of borrowed money. Today, it's kind of different. It's people who bought in and really need to get out, but can't because they can't accept the idea that a house can fall in value by 40%. And the way bubbles burst is that people change their attitudes about that asset, and then, they start thinking, okay, maybe it can fall. And then they start thinking, wow, maybe it'll fall a lot longer. And then maybe it's going to fall forever. It's going to go to zero, and you go through these kind of the bubble market version of the stages of grief. And where we're just at the very beginning of the first one in housing. But the fact that, go to Zillow and look at how many houses have had their prices lowered. That number's going up.
And length of days on market, yeah.
Yeah, that. And then the amount of inventory on the market, like in Texas now, Austin especially. I guess the inventory is exploding there, And so the previous bubble markets are the ones where it happens first. And then it just spreads. Everybody gets the idea that houses can actually fall in price, and they're going to for a lot longer. So, it's hard to imagine that we're not going to see that in the next couple of years.